Hey traders, Raghee here, and in this recap video we're going to cover our long position in crude. And crude had a good day today for our long position. We finally saw the market kind of get a little bit of escape velocity off and from that 50 major psychological level, that line in the sand, which really has been the zone, the lower end of the zone of what's been our first buy in this reorganized uptrend. Now my trust is low on this one. I know that so much of this can move with inventories and OPEC agreements and OPEC messaging to the market that they may cut more, they may not, they'll extend the cuts, who is compliant, who's not. So there's a lot of unscheduled events within this narrative, but it is a great play on the 50 major psychological level. So what do you do when you don't trust the market? That's really what we're going to talk about here. What do you do when you don't trust the market? First of all, you get much more conservative. And what does that mean? I'm looking for levels of entry that would be inside the wave, levels of entry that are going to need, multiple reasons why I think they could catch a bid. The 50 level, the Darvis giving me some support at that level, the bottom line or the middle line of the wave. Things like that are going to reduce my risk because my risk is on the other side of the 34 EMA on the low. So that's one thing I do when I don't trust the market. I make it give me a trade with a better risk reward. The other thing that I do is I monitor it closely. Now I can't monitor a daily time frame closely. I can't see what's going on inside that single daily candle. So what I do then is try to find clarity on another time frame. In other words, what other intraday time frames are offering me some sort of uptrend on that interval? So what are the respective grab candles and wave telling me across the 5, the 15, the 30, and the 60? That's what's going to tell me whether or not I have some intraday clarity that I can watch to see what's going on inside the single daily. And I think the 15 is kind of an interesting look right now because the 15 and quite frankly the 30 as well would have a zone between about 50-50 and 50-40 that those two intervals specifically would be relying on to maintain the integrity of the dynamic support that is the wave. So in other words, by breaking 50-40, 50-38, the integrity of the 34 EMA on the low, the bottom line of the wave, would be broken. Same thing with the 15. If the 50-50 area, this is actually 50-58, but if that area, 50-58, 50-50, were broken, that would break the validity, the integrity of the uptrend on the 15-minute time frame. So that would allow me to watch the market to see if we can continue to catch a bid and move higher short-term intraday, simultaneously giving me a very, very short leash in order to watch and even manage this ongoing crude oil trade. So that's what you do when you don't trust the market. And those are just a few of the tactics that I will use. I also like to see confirming secondary reasons. In other words, I like that I have a Darvis low that's running pretty much in line with the bottom line of the wave on the 15. I also like, so let me show you here, there's that bottom line, that Darvis, and there's the 34 EMA on the low. I also have on the 30-minute time frame some propulsion. Propulsion tells me that we have we have some momentum. The market's got its foot on the gas pedal within the context of this very fresh but still intact uptrend. I don't like that this uptrend was basically built on the back of 2, maybe 3 candles, but as long as we can maintain support above preferably the Darvis and most certainly the bottom line of the wave, and we have some propulsion, that's boding pretty well for support and potentially higher highs.